All right, let's dive right in. We're breaking down the latest numbers from Japan's rental market for October 2025, and wow, they are telling a story. If you're invested in Japan, or even just watching it, this is a trend you absolutely need to see.
Let's kick things off with just one number, 17. So what's so special about 17? Well, it's the number of consecutive months that rents for single-person units in Tokyo have hit all-time highs. Not for a quarter, not for a year, 17 straight months. That's not just a blip, that's a powerful pattern.
Yeah, so this isn't some flash in the pan. We're talking about a really powerful, sustained trend here. And that kind of momentum, well, it's exactly what serious investors are looking for, to understand where the market's really headed.
Okay, so to really get our heads around this, we've boiled the whole report down to 3 key points. Think of this as the executive summary of what's happening in the market right now. So here's the breakdown. First up, the singles market in Tokyo and Osaka is just shattering records left and right. Second, this isn't just a big city thing anymore. Family rent increases are going nationwide. And third, and this one is a really big deal, even the budget-friendly apartment sector in Tokyo is hitting all-time highs. All right, let's zoom in on that first point, because this is really the engine room driving this whole surge. The demand for those single-person units in the big cities. This is where the numbers get really eye-popping.
And look, this is absolutely not just a Tokyo story. We're seeing what you could call dual-engine growth. You've got Tokyo hitting 17 straight months of record highs, and Osaka is right on its heels with 15. When Japan's 2 biggest economic powerhouses are moving in sync like this, you know it's a solid, widespread trend.
So let's put a hard number on that growth. Plus 10.6%. Think about that for a second. That's the year-over-year jump in asking rent for a single unit in the Tokyo 23 wards. We're talking double-digit growth. That screams powerful demand, most likely from students and young professionals flocking back to the city. Okay, let's move on to our second major point, because this is where the story really broadens out. For the longest time, all the chatter was about Tokyo. Well, that's not the case anymore. This rental surge is breaking out of the capital, and the market for family-sized units is heating up all across Japan.
And this table right here, it just lays it all out in black and white. You can see it clear as day. From Sapporo, way up north, all the way down to Fukuoka in the south, every single major city they looked at is showing solid year-on-year rent growth for family units. This is the proof. The rental inflation wave is officially a national phenomenon.
So this begs the big question, right? Why? What's actually causing this nationwide surge, especially for these bigger family-style homes? Well, the answer is a pretty classic story of supply and demand, but with a very modern twist. Okay, so it really boils down to this simple 2-step chain of events. First, the prices to buy a condo have just gone through the roof, pricing a lot of families right out of the market. So what do? That's step 2. These families, who still have money and want a nice place to live, are shifting their focus to high-quality rentals instead. It's a direct cause-and-effect relationship that's pushing up rental prices everywhere.
All right, before we jump into our third and final point, there's a quick but super important piece of Japanese real estate lingo you gotta know. It's the difference between a mansion and an apartment. In Japan, a mansion isn't what you think. It's a solid, reinforced concrete or steel building. And an apartment, on the other hand, is usually a more affordable wood or light steel frame building. This distinction is absolutely key for what we're about to see. And here's why that difference matters so much. Check this out. Even that more affordable apartment sector in Tokyo has now hit record high rent. This is huge. It tells us that the entire floor of the market is rising. It's not just the fancy premium mansions getting pricier. The wave is lifting all boats, even the smaller ones.
Okay, so let's pull all these threads together. What's the bottom line here? What does all this data actually mean for you, as someone looking at the Japanese market? What's the strategic move?
You know, the report itself says it perfectly, so I'll just quote it. Inflation has arrived in the Japanese rental housing market. I mean, that's the headline right there. It's the new reality, and it's changing the game for investors.
So here are your key takeaways to think about. Number 1, the singles market in Tokyo and Osaka is still the most powerful growth engine. Don't take your eye off it. Number 2, because this trend has gone national, regional hubs like Fukuoka and Sapporo are now looking like really interesting places to diversify. And number 3, the fundamental drivers here are strong. We can expect this upward pressure on rents to keep going well into late 2025.
And all this leaves us with one critical question, especially if you're an investor. We can see the rising trend. That's not up for debate anymore.
The real question now is, what's next? Where's the biggest opportunity going forward? Is it in that big city singles boom, or is it in the nationwide family surge?
That's the million-dollar question we'll be tracking in our future updates. If you want to stay ahead of the curve with more macro insights like this, do us a huge favor and hit that like button and subscribe to the channel. Thanks so much for watching.